Hey, everybody. It is Chuck Barone on Tuesday, May the 7th, 2024. Got a big show today. Important news comes today, guys. Crazy times. It just keeps getting crazier. But I want to thank everybody yesterday. You guys really reacted well to the show. I thought it was kind of cool. A lot of responses to that Ayn Rand quote that I mentioned. And it really is a great quote for the times we're in. So it was cool to see everybody respond well to that. Anyway, before I get rolling here, let me take a half a second. Welcome everybody to the show. Good to see all my friends, Attila, Big Smoke, Salty, a lot of people up on here. Nice to see everybody getting together today. It's going to be an interesting day. We got some really important data on consumer credit today came out. And, the amazing thing was I did not elevate, touchdown Tommy, my man. Anyway, we got this number. It was shockingly bad, guys, really bad. But the markets shrugged it off. They kind of tucked it away. I had to go digging to find it. Okay, I knew this was coming today. I wanted to see it because we were expecting such a gigantic number. Anyway, so the markets today were kind of mixed. The Dow had another positive day. It's got a little bit of a winning streak going. But this is hopes and dreams, guys, okay? Still earnings driven, though. Stocks going okay. Most companies that are reporting earnings are doing better than they're projected to. However, some of these projections are pretty lame, right? They set the bar here. It's pretty easy to just step right over it. So anyway, interesting time. So let's go through these markets today. So the stock market was mixed day today. The Dow gains, the Dow up 31 points, sitting at 38,884. The NASDAQ falls 16 points, 16,332. And the S&P gains 6 points, 5,187. So it was a very quiet day, not a big up or down movement either way. The market's kind of, I think, floating in place. We got some data coming this week. It's really kind of a quiet week. Interesting, we had Neil Cash and Carry out today and some of these other Birkin and Barkin, whatever, yesterday, talking rates up a little bit. So we'll see where all of this goes. But this consumer number I'm going to go over in a little bit kind of nails it where we're at right now. The bond market today had a mixed day, a weird day in the bond market with the 10-year rallying up, yield falling 3 basis points, now sitting at 4.46%. The 2-year falls just a little bit, yield up 1 basis point, 4.83%. So the 2-year inching its way back up toward 5%. The spread between them pretty narrow, only 39 basis points. Not much of a spread there. This inversion, though, has been a record length of time. And from what I understand, the way these inversions work, when the recession finally comes, the length of time that the yields have been inverted kind of gives you a clue to the severity of the recession. If that works out as true in this particular time, we got a pretty serious recession coming. The dollar today rallies up 23 basis points on the index, 105.37. Still a good, strong number for the dollar. Everybody kind of getting pissy about it. I don't know why. It doesn't really help us much as far as trade goes. We'll talk about that a little bit here. The stronger dollar doesn't help us with trade, but it helps consumers. A stronger dollar means you can buy, it stretches it a little further. You can buy a little more with that dollar. It just doesn't help our exporters so much because converting foreign currencies to dollars costs more. You know the idea. So anyway, dollar rallies up. Precious metals fall today. Not much, though. Gold down $9.20, still sitting at $2,314.90, a good, strong number for gold. Silver falls 14 cents, $27.25. Good, strong numbers for metals. They kind of just been running in place pretty much like on a treadmill here, up and down, kind of staying in the place. I'm telling you, though, the breakout's going to come. We're just waiting for the reason. It's going to happen. Oil today falls 19 cents, $78.29 for a barrel of West Texas Intermediate. As I was saying to you guys, oil's going to come down. 70 to 75 is where we see it. It's where I've been seeing it for a long time. It had its big spike up with this Middle Eastern fluffer, and now it's coming back down to earth. It looks like we might actually get some kind of peace treaty between Palestinians and Israel brokered out. They're trying to work it out. Palestine. In the meantime, though, the Israelis bombing the crap out of them anyway, right? Bitcoin falls today, $334. Still a good strong number, though, 62,975. I've got some research I got to read up on Bitcoin. I've been going through it with some chartists, and there's certainly some different opinions about where Bitcoin goes next. But I'm going to get that dialed in and do a short report on Bitcoin coming up in the next couple of days. All right, let's talk about this consumer credit number today. I guess the only word that's suitable for the report is collapse. Now, I've been ranting and raving about consumers have been adding about $15 billion per month in credit. Credit card debt now passing $1 trillion. You guys have heard me ranting and raving about debt and how terrible it is and how you need to avoid debt. So, interesting numbers. So check this out. Today's numbers come up. They were expecting consumer credit to rise by 14.8 billion. Okay. And I was fully prepared to do a show today bitching about that endlessly because it's freaking insane. The number they got, guys, 6.27 billion. Oh, man. They didn't even get half of what they were expecting. This is a shockingly bad number, guys. Now, consumer spending, as you know, you've heard me say this on the show a million frickin' times. Consumer spending, 70% of the U.S. economy. We know consumers don't have any cash. We know that's all gone, okay? So the only way the consumers are spending is by borrowing. If the borrowing falls by 60 or 70%, not a good sign for the economy, guys. Okay? So now we got to see. It's really going to be interesting to see. This is going to put big pressure on retailers. I can't wait to see how this is going to affect earnings because there's like a missing, $8 billion here, guys. And that's going to show up somewhere. Oh, my. Now, this is a game-changing number, guys, okay? Super bad news for the economy. If this number stays down, okay, they don't rally consumers back up next month, it's going to affect company earnings. Company earnings then will go down, and guess what follows right behind that? The stock market. You still got an uneven situation with rates, with half the people thinking Fed's going to go easy, half the people thinking they're not. It's a perilous time for stocks right now, guys. Now, you got good, solid companies. Don't get me wrong. You got a good company, the Warren Buffett type of companies that pay dividends, companies that have a strong brand that people aren't going to do without, products that people are going to buy whether there's a recession or not. People are going to buy soap. They're going to buy food. They're going to buy things, right? And this number, I can't tell you how shocking this is to me. Now, here's the thing that this brings with it, though, okay? This number certainly increases the chance that we will see a Fed rate cut. The Fed's no dummy. They know if the consumer's tapped out, the consumer needs a little bit of a jolt to keep moving this economy. The Fed's going to provide that. This number today certainly points to not higher for longer, guys. Okay? Not higher for longer. I'm going to have to reevaluate some stuff here because this number tells me. Now, again, we're going to have some confirmation. This could be the weird aberration, right? But if this is kind of where we're going with consumer spending, we probably will see a rate cut I'm sure they're going to want to try to get it in before the heat of the election. So I would guess before September, and then not again until after the November election. But I think that this number now indicates we may have to have a rate cut sooner than I certainly thought. I was figuring if we're lucky, if we get one this year, this is a stunning, stunning, stunning turnaround here. Not even half. That's a shocker. Now you guys probably saw this. This was in the news pretty well today. Neil Cash and Carey out there talking about how the housing market basically shows the Fed that they don't have rates high enough. They don't have rates restrictive enough to settle down the economy. I think he's a little misguided here because housing prices are not going up. There is big demand for housing, but that's not the reason prices are going up right now. Prices are going up, as you guys have heard me rant on ad nauseum, that they're going up because there's no houses to buy. You have supply and demand. When the demand is kind of high, but the supply is low, that makes prices go up. If the demand was low and there was a lot of supply, prices come down. Well, what we have right now, obviously, is no supply. People not wanting to get rid of their 3% mortgages, and hell, neither would I. Okay, it's crazy, crazy stuff because now you got this data, and I'm sure our esteemed Fed governor, Cash and Carey, saw this today. Okay, now if consumer credit is collapsing at these rates, what do you think happens if they raise rates? So it looks like ultimately it's going to be the Hobson's choice for the Fed, the worst possible scenario, right? They're going to have to make the decision. Do they want to follow through, get that inflation back down to 2%, or do they want to save the economy at the expense of a higher inflation number? This is the worst possible scenario for the Federal Reserve. It looks like that's kind of the way we're drifting here, guys, okay? It's going to lead to stagflation. We've talked about that on the show many, many, many times. I don't think we're going to have a situation as bad stagflation-wise as it was in the 70s and 80s where they had a shit economy and they had 10% unemployment. I don't think it'll be quite that bad. But what we're looking at is pretty much an economy that's just bleh, not great, not good, but not bad or terrible. It's just there. It's just functioning, but not in a great way, not in growth, that's for sure. And you're going to have the Federal Reserve freaking out because prices are going to continue to climb. So the Fed only has that one gun. It only has so many bullets in it, right? And if the Fed is stuck in a situation where consumers are tapped, but inflation's heating up, what the heck are they going to do? It's going to turn into, like I said, a Hobson's choice for the Fed, where they're going to have to they're going to either have to deal with it, live with inflation, or live with a terrible recession. And I'm telling you right now, none of them wants that. Okay, so Neil Cash and Carey, knuckleheaded Fed governor, looking a little disconnected from reality here because I'm not sure. Now, again, he was out front, and he was obviously, other than the Trump trial, that was dominating the news today. But as far as economic news, he was the man. They had him up front. I had to go digging to find this consumer credit number. Had to go actually to the Federal Reserve website to find this number. No media reporting on it, which is strange because I don't subscribe to just like one side or the other like a lot of people do in news. I want it all. I'm going to try to balance it out. This horrible, horrible stuff and hidden. What you're getting today, guys, again, I usually am a day or two in front of the media. So what you get on this show is tomorrow's news today. And tomorrow you'll see, maybe they'll talk about it. Maybe some analysts will talk about it on Bloomberg or CNBC or whatever. But you get it here first. All right. Americans, we had, they know during the pandemic, Americans put away, saved up $2.1 trillion. They had stimulus. They didn't have anywhere to spend money. They had maximum unemployment benefits. They had all kinds of special things. People took that money. They really couldn't spend it. So they saved it up. They had $2.1 trillion in what they called excess savings, right? Well, guess what, guys? All gone. 2.1 trillion. Bye-bye. No more, no more, no more. Doesn't exist. So that is when you hear that, and then you see consumer credit crashing down. What does that tell you? Consumers have finally had enough and are pulling in their horns, maybe even, who the hell knows, trying to live within their means. I'm reading some of the comments, so forgive me for glancing over this way. But terrible, terrible news. We knew the savings rate was cratering down. I think it's around 3% now. And that's like, for the people that number is kind of misleading, because most people are saving zero. Some people are saving a lot more, and then they average it out to 3%. But we know most middle-class Americans and below are not really saving any money. Hopefully the people listening to this show are, because we've been telling you that's our number one thing. You got to stash. You got to live below your means. You got to learn how to do it. You got to fight to do it. You got to suck it up. Save some money from all the income you get. It accomplishes two things. Number one, you learn to live within your means, which is really difficult for most people to do in this era. And number two, you start a stash. You start building something. Anyway, the Treasury auctions. Have you guys seen these numbers? Treasury auctioning off so many bonds, so many bills, so many billions and billions and billions of bonds. They're afraid that these are not, they're already having some difficulty. And these numbers are staggering. Listen to this. Tomorrow, the Fed is going to auction off $42 billion worth of 10-year notes, the 10-year bonds. The following day, on Thursday, $25 billion of 30-year. This is every day now. 40 billion, 25 billion, 50 billion. This is in addition to everything else the bond market does. I think that kind of cues us in on why the Fed tapered. They're tapering, they're doing their QT, why they reduced that by 35 billion. It looks like the Treasury needing some help with their bonds. Now the Fed going to start rolling those bonds over, and instead of retiring those bonds, they're going to start buying bonds back to help the Treasury out. That makes sense, right? Globalization winding down, guys. Big doings here. What's happened is the U.S. we need to bring our manufacturing back home. Okay, globalization is breaking down. We can see the rivalries: China, us, Japan, Korea, everywhere else, right? Globalization breaking down, but we still have a $773 billion trade deficit every year. Well, guess what? As that world global trade breaks down, all those prices are going up, guys. And you have Trump then coming in with his tariffs, all those prices going up. We don't make anything in this country. We buy everything from overseas. We're screwed, man. That is going to make this inflation we've been having look like fun time at the park. Couple quick hitters. Boy Scouts, no more. Changing their name. Now it's called Scouting America. They're the poster child for this diversity, equity, and inclusion thing, whether you believe it or not. I think it's the end of scouting as we kind of knew it. Now they're not doing Boy Scouts, they're not doing Girl Scouts and Cub Scouts and all that. Now it's just one big group. Everybody's in it together. Square guys, gay guys, women, girls, children. It's just a big hodgepodge, also known as Toast. And finally, this one made me laugh, guys. Here in Vegas now, the newest genius move. The way it works is you put your club membership card in it. You get points for free stuff or free play, blah, 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 blah. Now these clever guys, you know what they're going to do? You just put your debit card directly into the machine. What could go wrong, man? Let's put our debit card into a friggin' slot machine. You gotta give these Vegas guys all the credit in the world. They know how to pick a pocket, man. Okay, so what they're going to have now, they're going to be able to pilfer. Your people are going to blow way more money in slots, right? They're going to have all your data. They're going to know when you get your deposits, how much money you make. They're going to know when to send you promotions. It's just further signs of the coming apocalypse. Anyway, I've been really rambling. I'm already over. That's it for the day, guys. We will be back tomorrow. Watch and see in the media. You're going to see about this consumer credit number. It's going to be fascinating if they don't. Are they going to try to just like quick under the rug with this? I can't wait to see it. But we'll be back tomorrow to bring you the news you need. Please hit the like button. It changes the algorithms. As you guys know, we need those views. It's so good to see everybody on the live stream and chatting. Hey, Donna's on. Yay, Donna. Good job, Elevate. My man, Thomas Swanson, one of my big fans. Anyway, guys, that's it for the day. We're back tomorrow. Till then, take care. Thanks.